Hello, this is the trade site U.S. stocks and futures market preview and domestic economic data roadmap for the week beginning Monday, the 24th of February, ending Friday, the 28th of February. A couple things to point out. This is a leap year, so we do have a 29th day of February this year. But Friday, the 28th, will still be the end of the month and statement printing date. There's a couple things to talk about on that monthly chart, but let's just start by looking at the daily charts of the majors. Then we'll look at some monthly stuff. Then we'll look at the intra-week action. Then we'll talk about the week ahead in terms of economic data. So here's the ES front month futures contract. This is the daily chart of the broad market and futures form. We did roll over a bit here and picked up some speed to the downside on Thursday and Friday in particular, obviously. Crude oil down 42 cents to 53.46, but a little bit off the lows. Gold up 25.14 or 0.4. Breakout in gold despite the 13 sell signal. Markets are shaking that off. The S&P cash lost 35.48. Look how carefully at how tiny a lot of these candles have been on the S&P. The intraday trading ranges, the massive part of those ranges, has not been pretty. NASDAQ 100, though, down 181.14. Remember, they got a static trend line down just under 9,000 there, so keep an eye on that. SOX down 58.2. Tried to make new highs and failed almost immediately. Biotechs couldn't get to new highs, down $3.28. That's pretty minor. Russell 2000 down 17.46. The VIX gains $1.52, sweeping over 18 again. Turning back up here a bit. By the way, if you take the trend line on this from back in August, you run it through the highs of August down to the highs of October, the highs of December, and the highs of January. We had broken out of that, here in late January, and now we pulled back, retested that, and now we're curling up. And you know how that goes. If we now take out the 20 range on the VIX, it should be a higher chart, and that would mean lower prices on the market, of course. Trend 1.04, that puts the 10-day at 1.13, so that's not a signal for us. Remember, options expiration was Friday, so 2.74 trillion shares, which is higher than we've seen, but remember, a lot of that is the options expiration volume, which is not real. NASDAQ advance decline ratio, negative 1138, so more stocks down than up by a lot. On the New York, negative 1147. Fourth worst day of the year so far. Google down $33.53. It came within a day of a 13 sell signal. Apple down $7.25. Netflix down $5.93. Amazon loses 57.13. Tesla up $1.59. Remember, there's a 13 sell signal there, but we made some money there this week. Facebook down $4.40. Goldman Sachs down $2.11. TLT, the 20-year bond ETF. Look at that. How's that for a big cup formation? Talk about rates being at lows. This is the 20-year. Ooh, this thing breaks out. Looks like it, huh? Dow down just 227, and that's it. In terms of intra-week action, let's go to 5-minute candles. Sorry, 10-minute candles. Now, we had a Monday holiday, so you can basically, that's Friday, last Friday, the prior Friday, on the very left edge. Then the little dots you see, that's Monday's action. That was not an open day. So Tuesday, we basically gapped down a little bit from Friday, went lower, but came back up, closed about where we opened. And then Wednesday, we gapped up, so that fills the gap from Friday, went higher, and then rolled over a bit, closed just above where we opened. Thursday, gapped down, filled the gap, and rolled hard. Now all the gaps for the week are filled. Bounced back a bit and closed about mid-range for the day on Thursday, and then Friday gapped down and just pushed lower. NASDAQ side looks fairly similar to all that. So you're closing down near the lows of the week, and it is what it is. Before we move on to the economic data, though, let's take a good look at this. This is one of the things that matters so much. So that's the weekly. Sorry, my bad. Let's go to the monthly chart of the ES front month futures contract. In October, we had gotten a 13 secret sell signal. November and December, we inched up towards that risk line of that sell signal. That's that pink sideways line that's at 32.55 exactly. Okay. And you remember in January, as we closed out, we were kind of a little volatile in those last few days. And even though we'd been higher, we managed to go back down and close under it. We closed out January at 32.24, which was actually 30 points below 32.55. So you have to close above the risk line and then take out the high of the prior candle to negate the signal. And on a big time frame like the monthly, it's important to see how it plays out. Once again, here we are, 1 week left. We're holding out above the 32.55, but there's two things that have to happen to negate the signal. First thing is that on Friday of this coming week, on the 28th, we have to close above 32.55. So market rolling over right now, we'll see if that happens. If not, that risk line holds automatically. And then second, if you do close above 32.55 on Friday, then you have to take out this month's high, current high, in order to negate the signal, which is at 33.97.50. So that's where we stand on that sell signal currently. It's pretty interesting, though, the way the market dealt with that at the end of January. So we'll see how it does at the end of February. In terms of economic data, we got the G20 meetings over the weekend. Fed member speaking on Monday, that's it. Housing price index at 9 a.m. on Tuesday. Another Fed member speaking. Consumer confidence at 10. Richmond manufacturing index at 10. Wednesday, new home sales at 10. Crude oil inventories at 10:30. Durable goods and preliminary GDP, the weekly initial and continuing jobless claims at 8:30. 10 a.m., this is Thursday now, 10 a.m., pending home sales, 10:30 natty gas, more Fed members speaking. And then on Friday, we've got core PC, price index, personal income and spending, the goods trade balance. That's all at 8:30. Chicago PMI at 9:45, and University of Michigan sentiment at 10. So lots of stuff coming out this week. None of it's the major stuff. We've got none of the big three numbers. We've got no Fed meeting. We've got no first look at GDP, all that stuff. But there's some stuff here that could easily move the market. And obviously, we saw a slowdown this week in some economic numbers. That's the other thing to keep in mind is, for example, on Friday, we got the flash services and manufacturing PMI numbers, which both missed and came in, one of them under 50 and at the lowest they've been in quite a while. So, you know, we're not, there's definitely some issues out there when it comes to that stuff. We'll see what that leads to. Charts, as usual, brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great trading